So the question on everybody's mind is, why are the FIIs selling in India? What's the reason? Is it that they don't like the India story anymore? That they want to go away from the India story? That they find the valuations quite steep and they're finding better valuations elsewhere? Or is it the China factor, that they believe that China could be a better potential at this point of time? What is the real reason? Why are the FIIs selling like crazy in the month of October? They have sold so much. $50 billion is quite an amount of selling, and that has definitely had an impact on the Indian markets, although it has been more than compensated by heavy buying by the DIIs, by the retail investors. You should understand that the dollar has rode to its biggest monthly gain in more than 2 years, propelled by bets that the strong economic data and a victory for Donald Trump in next week's presidential election will lead to interest rates staying higher for longer. So this is a factor that is pertaining to the United States of America, which is irrespective of any other country, India or the India story. Most people are not understanding this factor. They are only talking about India. Has something gone wrong with India? Should we write off? Is the bull run over in India? India's story is not over, but people misunderstand that from time to time there will be certain global factors which can impact the Indian currency as well as the Indian stock markets. So you see commentators come on television, on newspapers, they keep saying that India story, if you believe in the India story, you should remain here. But my friends, you don't understand that time to time the global factors will also come into play. And at that point of time, when the Indian markets weaken or they fall sharply, then that is the time when you have to understand, is it that the India story is over, or there are some global factors which are coming into play? Right now, the global factors are into play, not the India story is over. You're taking the wrong rationale for understanding why FIIs are selling in India. An index which is measuring the dollar against a basket of 6 other currencies, including the pound sterling and the Japanese yen, jumped 3.2% in October, its best month since April of 2022. The greenback's sharp rise reflects persistent signs of economic resilience in the United States of America, including surprisingly strong September payrolls data and evidence of higher consumer spending. It's been the perfect storm of dollar supportive information over the last few weeks. Data continues to paint a picture of an economy that's really that isn't really slowing down. That's the scenarios thus far. Market participants believe that increasing expectations in the market of a Republican election victory has bolstered the dollar's appeal in the month of October. The latest polls, of course, put Trump and the Democratic candidate Kamala Harris virtually neck and neck, setting the stage for an extremely tight race in just a couple of days' time. Investors believe, of course, that if Trump wins and trade tariffs and tax cuts are implemented, then the inflationary pressures would be compounded and the Federal Reserve would be less likely to cut interest rates rapidly. It's a combination of better than expected economic data, also the growing consensus that Trump is likely to win the elections. That's what the market believes, or the market likes to believe, whichever way you would like to take it. Of course, we also have our own predictions, and yes, do join our Prime or Prime Plus groups, which are addressed for the US markets. For the Indian markets, you can join Premium Plus or Premium Elite, which will give you our forecasts of what we believe can happen and how the markets look from here. While Trump has stated his preference for a softer dollar, he wants to encourage exports. You must have heard it from time to time. Yet strategists believe that it is logistically difficult to weaken a currency. Logistically difficult. After the policymakers lowered the interest rates by an unusually large 0.5 percentage points, in September, markets priced in at least one more jumbo-sized rate cut before the year end. But those expectations have been scaled back over the past 1 month. Futures markets are pricing in a quarter point reduction in next week's Federal Reserve meeting, and those views have been cemented after the October payrolls came in much lower than expected on Friday, although distorted, of course, by major hurricane and worker strikes, while the unemployment rate held steady. Markets at the end of this week showed rising odds of another quarter point cut in the month of December. Still, if Harris were to win the election instead of Trump, then one cannot say for sure that Harris is going to be fundamentally negative for the dollar, right? Some positions may unwind if Trump loses the election, but that's a dip. Data, central banks, the economic outlook, all of those things are moving back in favor of the United States at this point of time. Recession nowhere on the horizon, job market still resilient, and consumer spending still intact. Friends, the extent of that currency weakening has to be limited by economic data that is emanating out of the United States, and the dollar may not undo an entire month's worth of gains should the elections go not in favor of the dollar rising further. But I believe that just because the US greenback has been rising so sharply does not take away the credits of a good economic story in other parts of the world. Particularly India is right now head on head towards slowly, gradually, but still very rapidly in some ways moving towards being the third largest economy in the world in some period of time. So the gains remain, yet valuations are something that has to be taken into consideration. Also, I believe that what will be the final outcome will have a major impact on the greenback, and therefore FII selling in India may increase or decrease based on the November 5 election results, which may not come out on the day itself, but over the next few days forthcoming thereafter. So friends, stay tuned, and love to hear from you. Do WhatsApp us on 9820861044 if you would like to join any of our Telegram groups. And definitely do keep in mind that yes, there are economies across the world which are doing exceedingly well, and they will continue to do exceedingly well. But what happens in one part of the world, such as the United States, will have a tremendous impact wherever you may be, however resilient your economy may be, however resilient your country may be. That's why you see the Indian rupee having dipped towards a record 84 plus versus the dollar. Anyway, the impact on the stock markets is something that will heavily lean on what the final policies of the new president-elect will be. Stay tuned. We give you our own expectations, our analysis, what we believe is likely to happen, and I'm sure you'll find it of great worth. Happy investing. Have a great week ahead. Take care. God bless you all.